All right, then news hitting our screen is the HDFC Bank fourth quarter results. Looks like the net profit has met estimates, a tad bit below estimates. If you had to, 4,800 is where the net profit is. Our poll was close to around 4,880 crores. As far as the gross NPAs are concerned, a 400 crore rise on an absolute basis quarter on quarter, but in percentage terms, 1.3, that compares to 1.29. So stable as houses as far as gross NPAs on the percentage basis are concerned. Net NPA has come down quarter on quarter by an absolute number of close to around 170 crores. So that's as far as the frontline numbers that we're getting. For more, we have Abhishek with us. Abhishek, what do you make of these numbers so far?
Well, the NI is also a miss. Now, the NI is close to 10,658 crores. So that is a growth of 17.7%. Now, our poll was about 19.2% growth in NII. So a slight bit of, miss. But if you look at the loan growth, now, loan growth momentum is really very strong. Look at the loan book. Now, the loan book is crossed 7 lakh crores. So that is a growth of about 26.2% on a YOY basis. And on a sequential basis, the loan growth is at 10.9%. But it's more heartening to see the deposit growth on a sequential basis is close to 13%. Overall, with asset quality remaining stable, these numbers are will be taken well by the street.
All right, these numbers will be taken well by the street. Just taking a look at the provisions as well, 1,541 crores is where the provisions are. That compares to about 1,261 crores that the company had posted in the same quarter of last year. And sequentially, it's gone to 1,541 crore versus 1,351 crores. So just about 200 crore growth seen there as well. So no real movements as far as the provisioning is concerned. But we have Prakash Diwan with us. Prakash, 4,800 crores in the net profit. The asset quality by and large maintained at 1.3%. That is the gross NPA that I'm talking about. But Abhishek tells us that the net interest margins, net interest income is a tad bit below expectations. What do you make of HDFC Bank's performance so far?
I think, Manglam, I wouldn't really give it this kind of verdict that it's a miss. Yeah, 81 crores short of expectation, but then expectation could be all over the place. So that's fine. What's interesting is two things that I take away from this first look at the numbers. One is that the net NPAs not just remain the same, they're probably slightly softer. So gross NPAs is fine, is probably higher by about 400 crores, if I'm not mistaken. But net NPAs is not at all a worrisome area. The provisioning means the slight improvement in provisioning that you referred to actually means that the bank is not getting into a complacent state where they would say, okay, we've kind of done with whatever we had to in terms of writing off and providing for bad loans. That also is adequate and even more. So I think people will understand the fact that credit growth in a scenario where very few banks, I think barring HDFC, Kotak, Indus, there's hardly anybody which is really growing at all. So this seems to be the natural course of market share improvement for some of these banks. And that will be dramatic in the next couple of quarters. So you can see market share improvement and hence absolute credit growth and net interest income growth, not maybe necessarily margin. So I wouldn't be very worried about it.
All right, Prakash. Also looking at a few of the segments, if you take a look at their retail banking business, which is what HDFC Bank is famous for, the operations income segment results, if you take a look at the operating income coming in from their retail banking business from 2,221 crores, that one's jumped to about 2,900 crores. From 2,300 crores, it's jumped to 2,900 crores on a quarter-on-quarter basis. And this, when all the other things, the wholesale banking as well as treasury income that was expected to decline, has declined. So the retail franchise looks like it's done much better, but we'll get in some more perspective coming in from Siddharth Purohit from SMC Institutional Equities joining in too. Siddharth, first look at the numbers. What do you make of HDFC Bank's fourth quarter numbers?
I think the bottom line number is almost in line with what I expected. And even on the asset quality also has been fairly stable. If you look at quarter on quarter, it has hardly changed on the gross level. And on net level, rather, it has been improved. And provisioning number, as far as I was expecting, it has been almost in line with expectation. That means they have been able to maintain the credit cost. Now, I think on the loan front, probably they could have I was expecting that being a fourth quarter, they could have done little better on that front. But asset quality is definitely a very stable set of numbers, so not a issue from that point of view.
All right, Prakash, I'm looking at their other banking operations as well. That looks like the operational income out there has increased by about 70% from close to about 1,000 crores. It's grown to about 1,850 odd crores, from 1,100 crores to about 1,850 odd crores. Retail banking doing fairly well. Just by these numbers, HDFC Bank is known to not surprise much as far as their expectations are concerned. They've been very consistent. Do you think that there would be any seminal change in the stock price on Monday's trading session?
I mean, it could only improve because, it only bolsters the position that the bank has within this, realm of falling giants. I mean, you have Axis and ICICI struggling so much, Mangalam, that if HDFC Bank can continue its march forward with the retail franchise that it has, what I'm trying to say is visualize what happens if you continue with this for the next 2 quarters when the
Absolutely.
other banks are kind of struggling. And that's where the premium that it always got will get not only justified, but then, the ownership levels will be much more better. So I think Monday morning it will only see a re-rating continue in terms of the upward momentum. Maybe nothing very dramatic, as you very rightly said. It's Mr. Consistent, as we call it. But there could be anything flawed in the perception of the market for these numbers.
I would just like to highlight, Prakash, taking a cue of positivity from there. The PAT growth is the highest in last 6 quarters. So 6 quarters, the PAT growth has improved from 15.1% to about 20.3%. So that's the highest in last 6 quarters. Also, if you look at the loan growth, now 26% is below the 27%, 27.5% that they recorded in the previous quarter. But you have to remember the fact that, Q3 FY17 was a demonetization period. And after that, in Q4, they showed a growth of 19.4%. So despite the fact that you have a higher base in Q4 of last year, the loan growth at 26.2% is a heartening point to see. Even if you look at the sequential loan growth, after 3 quarters, for the first time in last 4 quarters, it is in double-digit terrain.
All right.
And Mangalam, I just wanted to add one quick thing that, I was going through the numbers of the earnings flow that we've seen for this quarter. Out of the total earnings that have come through, about 8% top line growth and a 7% bottom line improvement has already been seen. Now, which means that finally somewhere, companies will start, businesses will start looking at capex in the quarters to come if things look up. And that is where, a bank like HDFC can also make sure that the loan growth is much more, continues to be superior. So just adding to what Abhishek was mentioning, I think the market will like the setup of what these numbers foretell going forward.
All right, Prakash, you are alluding to loan growth, the picture looking good going forward given the increased capex. Abhishek, you're talking about the company consistently growing the loans. The capital adequacy ratio is close to around 14.8%. Do you think the bank may require capital going forward?
They already have a fundraising program in plan wherein, they have categorically mentioned that they are looking to raise anywhere around 24,000 crores. And in line with that, HDFC Limited has also mentioned that they are looking to, finance up to 8,500 crore to maintain their stake in HDFC Bank per se.
So they are fairly capitalized, so no problems there as well. Siddharth, your call on the stock, just the basis, these numbers, the stock trades at a fair amount of premium to the sector, but has performed fairly well. The ratings should sustain?
Yeah, we have a positive view on the stock. And as far as, the growth is concerned, it can vary quarter to quarter. So as the asset quality is concerned, they have set of numbers. So because of that reason, they have always attracted. So we maintain positive stand on that.
Right.
Yeah. Just to highlight, just getting the press release, the net interest margin, which is a key factor, has remained at 4.3%. So this is flat on a YOY basis and even on a sequential basis. So despite the fact that, NII growth has missed our poll numbers, the net interest margin, which is a key factor to, factor in the results of HDFC Bank, has remained at 4.3%. So no worry on the margins front. Prakash, your take on the same?
Yeah, and this is in a scenario where we thought cost of funds was going up, and this could have had an impact, which was probably a worry of sorts, a shade of worry. But I think that's also out of the way. So I'm sure now you won't even worry much about the net profit miss from some of the estimates. and then it will probably start looking green on all your three dots that flash on the screen.
Right, so maybe the company is looking at preparing or maintaining its margins at the 4.3%. As you're saying, the cost of funds are increasing. But Prakash, by and large, a general word on the banking sector. There is HDFC Bank, and then there is the rest. We have asset quality woes coming in, and now, you know, with the RBI circular on Feb 12th, we had the managements of a lot of these banks saying that fourth quarter and the first quarter of FY19 looks like a total washout given the increased provisioning. So in that regard, do you think HDFC Bank will continue to outperform much more going forward?
Technically, yes. I mean, in theory, yes. But what happens in practice, Mangam, the limits that HDFC Bank has for FI ownership, that's always been a limiting factor. I mean, FIs can't have enough of it, and,
right.
and you know, how much can you get more in terms of free float? So that's one of the reasons why I've seen in the last 2 quarters there's been a lot of nibbling into the likes of Kotak and IndusInd. And that could probably continue, and these 3 banks could be set aside in a different bracket, which would be upwards of a 4 times price to book, club of sorts. So there could be more disparity between the performers and, the yet to perform kind of private sector banks now.
Mangalam, I would just like to highlight on the loan growth how it has shaped up. You know, the total loan growth has come in at about 26.2%. Let's break it up. So the retail loan has come at 27.8%. That's a very heartening factor to see. But what I highlighted during my preview of HDFC Bank yesterday was they have been eating into the market share of PSU banks, especially in the corporate portfolio. And that is clearly visible in their results. A 15.7% sequential loan growth in the corporate sector. So overall, their corporate portfolio has increased from 41.7 to about 48.2%. That's a massive improvement if you look at their overall corporate portfolio, which they have been taking the market share away from PSU banks.
All right, Abhishek, that's actually quite a heartening point that you're talking about. They're eating into the corporate portfolio. Corporate loans have grown from 41% to 48%. So HDFC in line with expectations, a tad bit better than expectations. No disappointments. Thanks a lot, gentlemen, for joining in and giving us your views on HDFC Bank's fourth quarter. And Abhishek, looks like it's going down as a good quarter. It will be very interesting to see how the stock performs on Monday's trading session, given the recovery that it saw from the lows in yesterday's trading session. With that, it's a wrap on this edition. Stay tuned to CNBC TV 18.